Howdy folks, and welcome to the Daily Coin. My name is Rory, and today is Friday, October the 6th, 2017. And what you're about to hear is a conversation between myself and Louis Cammarosano from Small Gold. And it's a conversation we had on Thursday, October the 5th. And we had planned on doing a show, and instead we wound up having this conversation, and I was recording the whole time. And we cover everything. We cover a lot of silver, and we go over the numbers from the Silver Institute. We get pretty heavily into that and try to figure out where this silver deficit of 2 billion ounces is coming from and how that plays into the market that we currently live in. So the conversation is going to abruptly end. There's not going to be a formal ending. There's not even a formal intro, which is why I'm doing this. So it's a little bit different. It's really, really good in my opinion. I think that you'll find a lot of the information to be helpful, and I hope you enjoy it. I mean, it's a little bit different than what we normally produce. So without any further ado, a conversation between Louis Cammarosano and Rory Hall. Thank you very much for tuning in.
Well, and the reason for that is, and I guess they get tired of saying it, is manipulation, but call it what it is. If that's the reason it's going down, you can't explain it otherwise. You've got massive imports into China, massive imports into India. Forget the United States retail buyer was never, ever, ever. Even when they would sell 1 million ounces in a year, that was never an impact on the overall global physical market.
Correct.
It's not.
And even the cumulative over the 31, 40 years, whatever it is, since 1986.
It's nothing.
It's nothing. It's not, it doesn't equal, a week's worth of movement through the Shanghai Gold Exchange.
Right. And it doesn't equal what goes imports into Hong Kong, imports into it doesn't even equal an annual production. It's just, I don't have the numbers in front of me, but the amount of gold that the U.S. Mint sells. In fact, even in the record year of Silver Eagles, 47 million.
Yep.
That's less than half of what India imports in an off year in silver.
But now the cumulative of the American Silver Eagles is the second largest hoard of physical silver, above ground silver on the planet.
It's almost a year's worth of annual production. So it's relatively significant. But again,
it is significant because there's only one other group of silver that's measurable, and that's the SLV, and that's bigger if you believe that which I don't believe those numbers at all.
And the other pile is the what's on the COMEX with JP Morgan has 115 million. The other COMEX vaults have another whatever, so about 200 million there. Yeah. So if you add up the U.S. Silver Eagles, you get about 550 million. You add up the Canadians, you get about $150 million. So if you take just the coins, you'll get about a year's worth of annual silver mining production, which, as you say, is significant because most of the stock comes from just-in-time delivery of an annual supply. Whereas gold, they can stop mining gold today, and it won't have the same impact because gold supply only provides 3 to 5% of adding to the pile.
Right.
And whereas silver, when you don't add to the pile, most of it you use as you mine it.
Right. Most of that, probably 85, 90% of that is used. If not, no, actually, according to the Silver Institute,
there's a deficit.
There's a deficit, which exactly. I guess in this imaginary silver warehouse, there's somebody putting an IOU in there saying, well, we ran out of silver in October, so we owe you silver warehouse, imaginary silver warehouse. We owe you another 47 tons of silver. Sorry, we'll catch you next year. And then the same thing repeats next year. How the hell does that work?
Rory, you know how it gets even more outstanding, more ridiculous to understand is, first of all, there's two sets of numbers. There's above the line and below the line. They don't even include silver demand for ETFs, which supposedly is mega, right? Because there's hundreds of millions of ounces that are in those ETFs. They show a deficit, excuse me, without the ETFs, which means I don't know how, like you can hide ETF demand and ETF supply because you could just say, oh, there it is, and you just invent it and you make a data entry exchange. You cannot just say, oh, we shipped $35 million to an electronics manufacturer, but we didn't really because they're using COMEX contracts to take the difference. And the same with the mintages. You can't send somebody a silver eagle on a piece of paper and says, you could if people aren't taking delivery, but people do get the eagles shipped to them. The electronics manufacturers, the solar panel people, they actually take the silver. So there's got to be something wrong with these numbers because you can't have a deficit for 10, 12 years, and there's not being a stockpile to draw from because people aren't melting down their silver eagles to make up the difference, right?
Right. See, and that was the question that I asked last year when I reported on the Silver Institute deficit. It's like, okay, was this deficit produced from China reporting, well, we were going to manufacture, 1.7 million solar panels. However, we ran out of silver, so we were only able to produce 1.2 million solar panels, and therefore that created a silver deficit. I mean, it's just an imaginary number.
Yeah, well, it shows that people don't know. I don't see how you can logically put forward that these are the actual numbers when they show a deficit for years, and then when you throw in either the ETF numbers are totally messed up because then you have to say if they're real and the deficit is already real for the physical need to supply the coins, to supply the rounds, to supply the bars, to supply the industry, then how can you with a straight face say that every year there's an 80, 200 million ounce deficit and not be able to say, well, there's this massive chocolate mountain that they just go in and take whatever they need from it. Well, it actually leads credibility to that theory, but that theory has to do with gold. But where is this? Like you said, you and I was talking about this when the silver mint sales are massive in 2015, and India was importing 500, or they were importing about 330 million ounces. And you were saying, where's the silver coming from? We're both looking at each other. I don't know, because I was outpacing the global silver mining production.
It's outpacing everything.
Yeah.
I mean,
and it was doing it for
where
years.
does it come from? Where does it come from? And I've been asking that question for a very long time. I've been asking credible people, and the stock answer that I get is, well, it comes from the central banks or it comes from the ETF.
But Rory, doesn't a physical shortage would mean the price would go higher because the people who would need it would realize there's a deficit and would dig into their pocket to pay higher,
right,
just to get it. But
I
they
mean,
have no trouble getting it.
What did they report this past year? 34 million ounces or something short? 34 million at deficit? That's some ridiculous number. And right, why wouldn't Samsung, who needs a ton upon ton of silver annually to maintain their business. Their business falls apart without hundreds of tons of silver annually. But yet we're told that there is a deficit. So why isn't Samsung, which I think that they have purchased a silver mine, but why isn't Apple buying silver mines? Where is the silver coming from if it's in deficit? How is Apple able to get all the silver that they need? How is once again Samsung or GE or whoever is manufacturing all these electronics? Where's it coming from? Where does
Deficit to
the
me
silver come
shortage.
from?
Deficit to me means shortage, and therefore higher prices until things balance out, and there's no more longer a deficit because the demand gets knocked down when the price rises.
Right.
That's not what happens.
Well, the price is down. It's down
Well,
today.
the biggest, what's interesting is if you think about, and this is the discussion I had a couple of years ago, when silver was at its peak in our lifetime with India imports and every sovereign mint, even the Canadian mint in 2015 sold 40 million Maple Leafs when they used to sell like 800,000 just 10 years earlier. And the U.S. mint sold 47 million. The Austrian mint sold some ridiculous amount. India imported 230 million ounces. There was so much silver being consumed in 2015, and the price hit its low in 2015. And the reason the sales were up was because the price was down.
Right.
But you would have thought with all that massive surge in buying, the price would have risen, and it just kept going down all year.
It
doesn't make a stitch of sense. It makes no sense, which means either it's so manipulated, which I agree that it can be, but that the numbers on the amount of silver, the demand didn't outstrip supply. Because if it really outstripped supply by that amount, the price would have had to have risen irrespective of the contracts. Because like I say, gold, you can hide the demand with paper. You could say, well, yeah, there's your gold. We have it. Don't worry about it. You can't do that when people are counting on receiving. Remember that year? I think it was 100 and the blog post I did showed like 200 million ounces worth of physically delivered coins, rounds, and bars that year. When you include the U.S. mint, the Canadian mint, the Austrian mint, the Mexican mint, the Chinese mint, and all the rounds and bars, and plus the Indian and Chinese demand and the solar panel and everything. You can't hide that demand. That's physical demand. You can't say we shipped 47 million, but only 10 million of them were real silver. The rest of them were fake. And we know that's not the case.
Right.
I don't know. That's something that no one has an explanation for. And the Silver Institute and then the other one, Reuters, they both have similar numbers, but they don't seem to be. They say, well, after about 12 years of deficit, it could have some impact on price. To 12 years.
Why 12 years?
Well, it should have an immediate impact, unless it's temporary, unless it's just a little deficit, a little surplus, a little deficit, surplus. Hey, you could see that happening. But I can't see it happening.
Because then you're talking about rounding errors.
Right.
I mean, basically, so.
You're talking about temporary imbalances that correct themselves through the pricing mechanism. And price goes up, the miners make a little more. You hear what we had was the price went down and the miners they hit record numbers in 2014-15. 2016, they were off like 0.2% from the record 2015 in silver mining production. Now, we know why they do it, because they have to stay in business. So even if they have to produce at a loss, they still have to get the revenue to meet their bond requirements. So I don't know. That's something that doesn't make a stitch of sense. What does make sense, though, Rory, was something you said. I think it was in 2000. Yes, in 2016 we had this conversation. Remember 2016? The numbers were even stronger than record 2015 for the first few months.
Right.
And you said what they're doing is they're flooding the market to avoid a surge later in the year that might indicate that there's another record year, and they just can't have that. That's when Silver Doctor and everybody was saying at this run rate we're going to do 60, 75 million. And they were right. That was the run rate. And then it just stopped. Because what happened was they over purchased their planchets and blanks. They oversold to the authorized purchasers January, February, March. And then the authorized purchasers and the dealers were stuck with all that inventory.
Right.
And then what that had the impact of doing, and we still see it today, is lower and lower and lower interest in silver and declining sales basically every month since April, May, June 2016.
Right. Especially it really started in June, and in June of 2016, that's when it was really apparent that something was wrong with as far as the sales into the wholesalers from the U.S. Mint into the wholesalers, and it's never recovered. And now we are what 15 months. 15 months later, we're still looking at the impact of the U.S. Mint forcing 1 million eagles a week onto the authorized purchasers. For those first 3 or 4 months, it was really through about the second week of April, or
Yep.
maybe even later into
2016.
something like that in 2016, and it was just an unbelievable amount of silver that they were pushing through. And yes, everybody was all excited, and there was a lot of reports, saying this is going to be an unbelievable year. It's going to be off the chart. And it's like, okay, well, but where's it coming from? That's still my ongoing question. And it's been more so for gold, but really I should have been asking for silver, because where is it coming from? There is, like you pointed out, Lewis, you cannot hide physical need, not
Right.
demand, but physical need in manufacturing, with the biocides, with clothing, with the solar, with all of the needs, the physical need for silver. You can't go into the imaginary silver warehouse and pick up the imaginary piece of paper that says, I owe you 47 million ounces of silver, and take that back to the manufacturing plant. Doesn't work that way.
No, they have to have it in order to make their product. And we have never heard anyone say, we're going to do a price increase because of price of silver's gone up. We didn't see that when it went to 50. And we haven't seen anyone say there's going to be delay on your product because we don't have any silver. Which means they're having no trouble getting it.
But yet the Silver Institute reports a deficit, and has for, what, a decade?
More. I don't have the number. I should have had the numbers in front of me. We were going to discuss this, but as I mentioned, the Silver Institute does one, and I think the way they do it is they include the ETFs. The other one, the Reuters one, doesn't include the ETFs, but both of them show, and the one that does include the ETF shows an even bigger deficit. It doesn't make a stitch of sense how there can be annual deficits, not like deficit this week, next week, but annual deficits. That a cumulative deficit is a couple of years worth of silver mining production.
It's ridiculous.
Well, it just means we don't know the numbers, and that's true with a lot of things. But one thing I will say, I do trust the mint numbers, only because the incentive to lie on those is pretty low, and the markets are insignificant. And in the case of some of the mints, they produce annual reports, quarterly reports. Like the Canadian Mint produces a quarterly report. When people say, "Oh, they're lying," the demand is up. I don't know. There's reasons for countries to lie about how much gold they have. There's no reason for a business to produce its reports and act like, well, we really didn't sell 10 million ounces worth of gold this year, or silver, or inflate the numbers. That to me doesn't make any sense.
Yeah, I just pulled up Silver Institute's world silver supply and demand. I'm looking at the chart right now. Between 2007 and 2016, every single year, with two exceptions, 2009, 2010, there is and 2012, so 3 years, there's a deficit, anywhere from 20.7 million, which was 2016, all the way up to 167.5 million ounces deficit.
And what year was that?
That was 2008. So you had 167.5 million ounces of deficit in 2008, followed by 2009 and 2010. Cumulative of those 2 years would be 115 million ounces. So 64.5 million in surplus, 64.5 million in 2009, and 50.9 million ounces in surplus in 2010. So the combination of those two doesn't equal the deficit created in 2008. You're still about 45 million ounces short, maybe more than that, from 2008. So this is over the course of 3 years.
Right.
It's how is that possible? I mean, did they go into the imaginary silver warehouse in 2009 and load in 64.5 million ounces?
Well,
And
you
then
know
in
what they do?
2010 do the same thing? And then, oh, well, wait a minute, 2011, we got to pull out 65 million ounces. It's
What they
ridiculous.
do tell you, Rory, is that, and we know it didn't happen in 2015, that silver demand, a silver supply comes a very small amount from scrap. But scrap really only comes to the market when the price soars. Because as you mentioned, aside from the 550 million silver eagles that potentially could be rounded up, and that takes time, and not everyone
Yes.
does it, the junk silver that could be rounded up, the silverware collections that could be rounded up, yeah, that could come to market. But it doesn't come to market when the price is dropping. And when the price drops, that's when the demand increases, but the supply doesn't because you don't have any of the scrap supply. The difference with gold is most gold is recycled. So if you have a gold coin or a gold ring, chances are that isn't freshly mined gold that you have. That gold may have been part of a Roman's jewel. You have no idea. It could have been, it could be been recycled thousands of times by now. But when you
Yes.
buy an American Silver Eagle or a round or whatever you buy, chances are it's new silver.
Yes. Freshly minted or freshly
Mined
mined silver.
and mint. Yep. Where does it come from?
Yeah, because in 2016 there was only 139.7 million ounces of scrap. So that's all that was recycled. I mean, the total supply for 2016 was 1,007,000,000 ounces to be exact, and that 139.7 worth of scrap makes up a healthy part of that, because there was only, according to World Silver Supply and Demand, Silver Institute, 885.8 million ounces were mined, and that was it.
Okay, so I found that what I was talking about in circles. I pulled up my silver supply and demand report for 2016. Let me read this. The Silver Institute does not count silver held in exchange traded funds in its silver supply demand calculation. Now just think about that. If that silver is actually required and demanded to be put into a warehouse to satisfy ETF demand, they don't count it. So either they're saying, well, we don't count it because it doesn't actually go there, or this is just how we do our numbers. Then it says, rather, the Silver Institute reports silver ETF build of inventory as a separate line below their supply and demand calculation, meaning that ETF demand doesn't count as demand for their purposes. The addition of silver to ETF in prior years resulted in the Silver Institute's below-the-line supply-demand calculation to be in persistent large deficits, even if their above-the-line supply-demand calculation showed a surplus. So I think even in the years you're talking about, Rory, where they showed a surplus, if you throw in the ETFs, they're in deficit. So for example, I have it here. In 2010, the Silver Institute showed an above-the-line surplus of silver of about 52 million ounces. But after giving effect to about 130 million ounces added to ETFs that year, the below-the-line supply-demand calculation showed a deficit of 84 million ounces.
Yep, that's what I'm looking at. Actually, it says net balance is 77.2 for
Okay,
20.
but
No, I'm sorry, 71.1 for 2010.
Okay, but the point being is that it actually was a deficit, even though the year you're showing they should, because either the demand doesn't, either that silver doesn't go into the ETFs, which is a big problem, or if it does, then you got to count it.
Right. See, and if you look at that, if you look at the net balance, which is the below the line, what you're talking about, every year is negative.
Right.
Every year is negative. And this year, or 2016, which was the last year available, was the third largest deficit, with the largest deficit being in 2008 at 261.7 million ounces. And then this year, or in 2016, it's 147.5 million. That's a huge, huge deficit.
I'm sorry, there's one other thing they don't include. I'm going to send you this, my silver report. I do this for, anyway, it says, they also don't include silver that's stockpiled in the COMEX eligible warehouses. That's not included as silver demand either. So if you include ETF demand right now, not just SLV, that number is 950 million as of this report, May 2017. That's your big stockpile that you were talking about. But the COMEX silver inventory is also a couple 100 million ounces as well. And as that silver goes into ETFs and COMEX silver warehouses, Silver Institute doesn't count that either.
So where does it come from? I guess leprechauns come by and drop it off. I mean, I don't know where it's coming from.
Yeah, how does JP Morgan add from 2002 in their COMEX depository from 7 million ounces to the most recent 115 million ounces? That doesn't get picked up in Silver Institute's demand. Just happens to show up in JP Morgan's warehouse. You know, everybody's saying JP Morgan has all this silver. Who says they have it? I mean, it says, you know, let's take devil's advocate. I'm looking at it right now. JP Morgan's Chase Depository silver stocks, supposedly in their warehouse, they have 115 million ounces. How do we know they have 115 million ounces in there? How do we know, as you say, that there's 950 million ounces in the ETFs? But even if you say they don't have it, the silver that they can account for that's been delivered as part of coins, bars, imports to India, etc., still is deficit.
The whole thing, none of it makes any sense. None of the numbers can be real. It's all an illusion. That has to be, because you're talking about 1 billion ounces between the ETFs and JP Morgan. So it's more than 1 billion ounces just right there.
Yep.
So and there was only 1.107 billion ounces for all of 2016. So all of that's gone. All of that's in the ETFs and JP Morgan's vault.
And hold on, but not just JP Morgan. There are other COMEX vaults, so I got the numbers here. HSBC has 20 million, Brinks has 23 million, Scotia Makata has 20 million, Delaware Depository has 18 million, CNT Depository has 13 million ounces. All these other companies supposedly have.
That's another 120 million right there. So that's 235 million at least.
Yep. So COMEX, and then the Shanghai Gold Exchange claims to have, I think, 30 million ounces in there. I'm going to start saying, hey, I have 100 million. Can't prove I don't, right?
Right. You can't say that I don't, because I said I do.
And I give Silver Institute permission not to include my 100 million ounces.
Well, they're not going to count it anyway. You don't have to give them. You don't have to give them permission. They're just going to ignore it.
Yeah, and still, even when they ignore everything, they still come up with a deficit.
Close to 1 billion ounces deficit. So you would. Oh my goodness! Well, think how bad it would be if they included it. I mean, you'd be looking at, because right now the cumulative deficit from 2007 to 2016. So you would have to have, if you added the ETFs and just JP Morgan, or just the whole of the COMEX, now
over 200 million.
Now all of a sudden you're looking at 2 billion ounces in deficit. Because if you combine the ETFs, the COMEX, with the reported deficit, like I said, you're looking at well north of 2 billion ounces in negative territory. How is that possible?
When
How
they
is
only
China
mine 800 million or so ounces either.
885.8 million ounces in 2016? So how is China still producing solar panels? How and industrial fabrication in 2016 total was 233.6 million ounces.
Although, Rory, what's interesting with that line, though? The one thing that a lot of people don't notice is I don't have it in front of me, if you look at the electronics line,
Yep.
it's gone down from 300 some odd million down to close to 200 million. And that, I think, is because technological advances, and also because even though there's more electronics, they're smaller.
They're
That's the only thing I
smaller
can
and they
account.
use smaller amounts.
Yep. Yep. Same with solar panels. Solar industry has exploded, but the amount of solar used to supply the solar industry really hasn't. And that too is because of technological advances.
Right.
They're using like nano sometimes, and they're not using this thick silver paste, like from what I understand, as much as they used to.
That's correct. Yeah.
And there are substitutes too. Not that they're using them. They can use graphene and other things in not in panels, but in electronics. There's some other story that you had covered over a year and a half ago where they had figured out how to reduce the cost. And it really wasn't worth it to not use silver. They used aluminum and something else. But they still managed to find the silver, and the world still works. And we haven't even seen.
Yeah, it's still working, even though we're 2 billion ounces short. We're 2 billion ounces short since 2007.
I would think, though, Rory, and it is an important metal, I'm not denying that, but if we were at the point where there was a silver potential shortage, you would think the price, just to protect people from buying it and minting it into silver shield coins, would be $70, $80, $100, because that would knock the demand off for it. Like platinum and palladium, no one buys because it's just too much money. What are you going to do with it? The reason people buy silver is because it's cheap. But if people really needed to make all these things, then it wouldn't be that abundant for people to buy it cheap. Everyone says, well, we should thank for that. I'm like, how many decades do I have to thank for cheap silver? I don't know. You see, that's why gold, Rory, you haven't seen the drop in gold. Gold remains, it hasn't dropped. It remains, it's almost $1,300 now.
I think that gold is going to go much higher by the end of the year, and I think that by the end of 2018, I'm going to go, and a lot of people are going to hate me for saying this, but I'm going to go with what Jeff Christian said from the CPM group. See, his company is the one that pushes the buttons and pulls the levers that manipulates the price of gold and silver. So who better to know what it's going to do? And according to him, by 2020, the annual average high for gold will be north of 1,700, and it will remain above 1,700. It will never, the average annual high will not go, according to him, will not go below that 1,700 mark. That's what he said. And that's what has been completely overlooked in his most recent interview. What's been overlooked is the other part that he said that I found to be really important, was that between 1968 and 2016, had your portfolio included 27 to 30% of physical gold, then your portfolio would have done significantly better than a portfolio without that allocation of gold. Not 5%, not 10%, 27 to 30%. Okay. And and the reason that I bring that up is because that's what you always hear, these so-called financial advisors. And I'm not a financial advisor, and I'm not giving financial advice. I'm just repeating what's said over and over and over, that, you should have 5% or 10% or 15%. Jeffrey Christian said that had your portfolio contained 27 to 30% physical gold, then your portfolio would have done significantly better than a portfolio that didn't include that level of physical gold allocation.
Rory, I'll give you something so you don't have to cite Jeffrey Christian, because I know a lot of people don't like that. I actually did a chart from 1998 to 2017. And if you had dutifully purchased gold, 1 ounce of gold, at the average price per ounce each year. So in 1998, you bought an ounce for $294. 99, $279. 2000, it was $279. 2003, it was $363. 2004, it was $410. Every year, you just buy at the average price.
Just buy 1 ounce.
Yep. 2006, it was $603. 2008, it was $872. 2010, you bought it at $1225. Even in 2011, you bought it at the average high of $1572. 2012, you bought it at $1669. 2013, $1411. 2015, $1160. 2016, $1250. 2017, $12 whatever. Okay, you would have spent a little under $17,000. Your average cost would have been about $830, and the price today is
13.
Well, almost, which is about a 55% gain.
55% gain.
Just from just buying an ounce every year, not even thinking about it. Now, maybe you would not have seen the big rises in price, like in a short period from 2009 to 2000, but you would have had the gains when the stock market was collapsing for years. Also, you may not have cumulative stock market gains and dividends, but the point is, and this is the article I wrote, is gold's remarkable store of value shown in charts. In the chart, it shows that's a store of value.
Right.
Where if you put money away every year, that you're doing better than the dollar index. It's a 55% gain against the dollar. So if you had just put the money in the bank and got no interest, you wouldn't have had 55% gain.
You'd have lost that.
Right. We're not talking about trading here. We're not talking about riches. We're just saying if you'd put your 1 ounce of gold in every year at the average price, you're not trying to play smart here, try to get the best price, the worst price. So even if you look at gold, the last, since 2008, you still haven't lost anything. If you had put in gold every ounce, 2008, 9, 10, 11, 12, meaning you bought at the top and you didn't pick up the cheap gold before 2008, you would have spent about $12,000, and your average cost would have been $1,260, which meant you would have not lost anything since the financial crisis. Now, you would have missed those gains from 2009 to 2016 in the stock market. But remember, the reason you buy gold and you don't buy your entire portfolio is to store value. Well, you just stored it there.
Right.
You haven't lost anything.
You just stored $12,000 worth of value.
And you still have it.
And you still have it.
Now, if you had done that with silver, you'd be down 30, 40%. Silver is not a store of value when you compare it the same way I compared it over the last 10, 20, 30, 40 years. Silver has a spike every now and then, every 30 years, and it lasts, 3 months, and then it goes right back down. And that's why what you're saying is you're waiting for the next spike to convert your silver to gold.
Right. That's what I'm waiting for. And I'm hoping that it's not going to be another, 15 years from now. I really don't think that it will be, because our monetary system is so unstable at this point. Everything is kind of coming unglued at the seams, and
right.
the cracks in the global economy, the moves that the Eastern nations are making, China, Russia, India, all the heartland, McKenna's heartland, all of those small nations, in the Middle East, Africa, all of these countries are moving against the West, and the West is, doing its thing and just creating debt and death, and that's our number one export is debt and death, and people are sick of those two commodities, and they aren't buying them anymore. So I think that silver's time is coming. I just don't know when. I think that I really honestly believe, Lewis, that by the end of 2018 and into the first part of 2019, that we're going to see some very, very significant changes in our global monetary system based on everything that's happening right now. The shifts that are happening, I mean, with King Solomon meeting with Putin over oil, the situation that's happening with oil, the situation that's happening with gold, what's happening with the cryptocurrencies, what's happening with just everything that makes up our global monetary, economic, and financial systems is right now, as in our life, it is in a state of flux. It's in a state of change. All of these changes, they've been unfolding for the past 2 decades. And now
Yep.
all of these things are beginning to come to a head. And I really don't like, sticking my neck out there and giving some kind of timeline, but it just seems like, the comments from Christine Lagarde said point blank, by the end of 2021, we will have a digital currency, period. So that means that sometime within the next, 3 years, that there's this transition that's going to start taking place. Okay, so what kind of turmoil is that going to create?
Yeah, you'll
Or
see it.
go
You'll
ahead.
see it in the gold market first.
Well, but gold will bring silver along for the ride.
Correct. That's what normally happens. Is I've seen my experience in watching it is gold goes first, demand soars, and then people look at silver and they say, "Oh, what's going on down there?" And then silver catches up and passes gold, and then when the top is reached, silver collapses much more than gold, and then gold plods along.
Yes.
Because gold is always aware that no matter what time period you live in, that there might be a problem on the horizon.
Yes.
Silver is always more speculative.
Yeah, silver is a speculative play. There's no question about that. And at this stage in history, whereas it used to be silver was money. I mean, that was the
Right.
money that people used, but that hasn't been the case for a long time.
Mm-hmm.
But gold has always been money. Gold has been nothing but money, or something that people, use to praise their God, or in some type of spiritual manner. I mean, it's funny, and this was one of the things I was talking to William Engdahl about, because it's odd or funny that ever since humans began digging gold out of the ground, that it was an offering to God. And where did that come from? But anyway,
Yeah.
I find that to be an interesting little side piece to gold.
Gold has much more lure than silver. What's interesting is also, like, researching this, it hasn't been silver is excuse me, not been on the radar screen of Americans really since William Jennings Bryan and the Democratic Party wanted to get inflation through silver. Silver has been, the silver sales at the U.S. Mint used to almost be equal 1-to-1 to the gold sales. No one really wanted silver. It wasn't until the financial crisis of 2008. And really the proliferation of the internet and a lot of silver doctors, a lot of sites promoting silver, it really drove the silver sales. If you look at a long-term chart of American Silver Eagle sales,
right,
they don't really start going up until 2008. In fact, during Y2K, 1999, 98, 2000, those sales, there's not much in the way of silver sales. Gold sales, 1/10 ounce gold sales. I saw the chart I sent you on that. They sold over 2 million of those.
Yep.
I mean, they didn't even sell a few 100,000 American Silver Eagles that year. That's just the 1/10 ounce. They also sold over 1.5 million of the gold 1 ounce Eagle coins. So as just recently as the year 1998, 99, silver was off the radar screen for investors for Americans. It was not considered the place to go if there was a financial crisis, if there was going to be a lights out situation, ERP attack, any of that. People did not consider silver.
No.
It's only in the last few years that silver has been, and I don't blame the internet. I attribute to the internet the silver story. Mike Maloney, David Morgan. You didn't have this type of interest in silver 40 years ago, 30 years ago. You did have that spike, but the reason that Hunt was interested in silver is because Americans couldn't buy gold until 1975. And Hunt had already begun his acquisition of silver. He also knew that there wasn't that much silver. He did have that concept in mind, that it was easier to grab as much silver as you can as it was, and then it was harder for gold because he knew the central banks held gold and no central bank really holds silver. But the average U.S. investor, other than for brief shining moments, did not really flock to silver.
It's because they've been dumbed down to what
because they were
silver
into
is.
gold. Well, originally the folklore has always been gold. Gold standard, go for the gold, go for the silver. And silver was what they had in their pockets. Also, by 1979, many people alive had the experience of having quarters and dimes in their pockets that were silver. They never had the gold experience because that went away in 1933.
Right.
So silver was considered, as you say, everyday money.
Right.
They didn't view that as like the protection that they needed from this mythical gold.
And it's unfortunate. And like you said, thank goodness for the education that has happened via the internet, because now there's millions upon millions of people that understand silver a lot better today than they did even 10 years ago.
But one of the things they view with silver, though, is they think they don't have their gold education. There are a lot of silver commentators out there, no names, that actually act as if gold is not valuable at all.
Well, that's unfortunate, because gold is really, I mean, I got into precious metals by way of silver, and since learning about money and currency and economics and finance, I've learned that gold is what I want in my portfolio. I do have silver. I have a significant amount of silver, but the last 2 years, 3 years have really been focused on gold, because gold is money and nothing else, and everything else is credit. And as soon as you learn that, you will never be poor again. Or as soon as you understand that, you will never be poor again. Those are the words. Those are the only honest words that J.P. Morgan ever spoke. In mid next week sometime. So certainly appreciate everybody listening, and don't forget to leave some comments, good positive comments if you got any, and like, share, and subscribe if you're not already. Thank you so much.